Professional traders use 3 secret RSI rules. You've never seen them before. And if you don't learn them, you'll keep getting trapped at every oversold level. I'm giving you this entire RSI strategy right now. Here's what changed everything for me. I stopped seeing RSI as this magical reversal indicator. I started seeing it as 3 complete systems. Each system has one specific job. System 1 rides trends. System 2 catches reversals before they happen. System 3 confirms everything, so you never guess again. That's it. 3 systems. Master these, and RSI becomes your money printing machine. Real quick, RSI stands for Relative Strength Index. It's just one line that moves between 0 and 100, measuring momentum. When it's high, momentum is up. When it's low, momentum is down. That's all you need to know to understand everything I'm about to show you. Forget everything you learned about 70 and 30. The most important level on RSI is 50. Here's what you do wrong. You see RSI at 25 and think oversold, must buy. And you're fighting the trend every single time. You're trying to catch reversals that don't exist. But here's what I do instead. RSI above 50 equals bullish momentum, so I only look for buy trades. RSI below 50 equals bearish momentum. I only look for shorts. The 50 line isn't just a number, it's the momentum divider. Watch this with me. Every time RSI crossed above 50 here, price rallied. Every time it crossed below 50, price dropped. The 50 line literally tells you which team is winning, supply or demand. Very important. The market doesn't care that your RSI is at 70. In strong trends, RSI can stay above 70 for days. Tesla's RSI stayed above 70 for several weeks during its rally. If you sold at 70, you missed a 40% move. Pull up any chart right now. Where is RSI compared to 50? That simple check tells you whether to be bullish or bearish today. This one concept will completely transform how you trade. Now that the 50 line gives us direction, let's find perfect entries. Here's the mistake you make. You're always entering at the worst possible moment. You're buying after momentum is exhausted, or selling after it's already collapsed. You're always late to the party. The solution is the pullback zone. In uptrends, when RSI is above 50, wait for it to pull back to the 45 to 50 zone. That's your buy zone. The trend is taking a breath before the next leg up. In downtrends, when RSI is below 50, wait for it to rally to the 50 to 55 zone. That's your short zone. Here's the exact RSI trading strategy I use. Market is trending up. RSI above 50. Price pulls back. RSI drops to 45. I don't buy yet. I wait for RSI to turn back up from that zone. The second it crosses back above 50, that's my entry. The trend just proved it's still alive. Look at this trade. The market is trending up. RSI pulls back just a bit below 50, then crosses back above. Entry right there. Stop below the pullback low. Target at the previous high. That's a 3-to-1 winner using pure RSI strategy. And here's what separates profitable traders from everyone else. The acceleration signal. After your entry, if RSI breaks above 60 quickly, you can add to your position. The trend is accelerating. If it struggles to get above 60, keep your position small. The trend might be weakening. You just learned what most traders never figure out about RSI. The 50 line is the only level that truly matters. So System 1 helps you ride the big price waves, but all waves crash. If you only know this, you'll lose all your money. That's why you must know System 2 to get off the wave before it crashes. Let me show you how. Here's something that happens at every major market turn. So price makes a new high. Charts look bullish. But hidden in the RSI indicator is a warning signal that this move is about to completely reverse. You can't see it until you're already losing. This is divergence. And when you know how to spot it, you'll catch reversals that seem impossible to everyone else. Here's how it works. When price makes a higher high, but RSI makes a lower high, that's bearish divergence. Draw a line connecting the price peaks. Draw another line connecting the RSI peaks. When price goes up, but RSI goes down, the reversal is loading. The opposite works for bullish divergence. Price makes a lower low, but RSI makes a higher low. The selling is exhausted, even though price is still falling. That's a bottom forming. If that felt complicated, don't worry. Again, price up, but RSI down equals reversal coming. Here's another rule that'll save your account. Divergence must develop over at least 20 candles. Quick divergences over 5 candles are usually fake. A real divergence builds slowly as the trend exhausts itself. But here's the catch. Divergence alone isn't enough. I lost thousands entering on divergence without confirmation. That's where the extreme zones come in. Forget 70 and 30 levels. The real extremes are 80 and 20. When RSI hits 80, that's not just overbought, that's euphoria. When it hits 20, that's not just oversold, that's panic. These are emotional extremes where reversals actually happen. But here's the pattern that prints money, the double tap. Look here, RSI hits 80, pulls back to 70, then tries for 80 again, but fails. That failure is your signal. The buyers tried twice and couldn't push higher. The reversal is beginning. Watch this chart. RSI hits 80, pulls back to around 70, pushes up but only reaches 78. That's the double tap failure. I shorted right there with a stop above the high. 50 pips winner as market collapsed. The opposite works at bottoms. RSI hits 18, bounces to around 30, drops again, but it didn't reach the 20 level. The sellers are exhausted. That's your reversal buy signal. Combine these extreme patterns with support and resistance for devastating accuracy. RSI double tap at 20 level right at major support. That's not just a bounce, that's a major bottom. RSI failing at 80 right at resistance. That's your short of the week. Okay, now you can ride the wave and get off before it crashes. But sometimes you see a signal that looks perfect, but it can still be a fake one. Well, System 3 is your lifeguard. It's the final step that protects your money from fake signals. Let me show you how. Now, one time frame lies, but 3 time frames tell the truth. Here's the problem. You see RSI divergence on the 1 hour and immediately trade it. But you don't check what the daily RSI is doing. You don't confirm with the 4 hour. You are trading blind and wondering why you keep losing. Here's my exact RSI strategy using multiple timeframes. Daily RSI tells me the major trend. Is it above or below 50? That's my directional bias. 4 hour RSI shows me the setup. Is there divergence forming or a pullback to the zone? That's my signal. 1 hour RSI gives me the precise entry. Did momentum just shift? That's my trigger. Watch this trade. Daily RSI above 50. I'm bullish. 4 hour RSI showing a pullback to 45. That's my setup zone. 1 hour RSI just crossed back above 50. That's my entry trigger. All 3 timeframes aligned for an 80 pip winner. The magic happens when all 3 agree. If daily is above 50 but 4 hour is below 50, I wait. If 4 hour shows divergence but 1 hour doesn't confirm, I pass. This patience keeps you out of the choppy mess. And a quick tip, pick your timeframes using the 4x multiplier. If you trade the 15-minute, check the 1 hour and 4 hour. This ratio gives you the perfect balance between signal and confirmation. But you need one more thing. The final piece is confirming your RSI signals with actual price action. Look at this setup. RSI showing bullish divergence. But where is it happening? Right at major support. That's a high probability reversal. Here's what you miss. RSI divergence at random levels fails often. RSI divergence at major support or resistance succeeds 60% of the time. Remember this, the location matters more than the signal. Watch for these combinations. RSI oversold plus hammer candle at support. That's a power move upcoming. RSI overbought plus shooting star at resistance. That's your short setup. Another killer combination, RSI trend signal plus break of structure. Price breaks above resistance and RSI crosses above 50 at the same time. That's trend continuation confirmed by momentum. These trades are high probability. And one more edge, volume confirmation. RSI divergence with declining volume, then a volume increase as the price reverses. This volume pattern shows real money is positioning for the reversal. Let me show you exactly how I use all 3 RSI systems every single day. This is my 5-minute morning routine. Step 1. Check the daily RSI. Where is it compared to 50? That's my bias for the entire day. Above 50, I'm hunting longs. Below 50, I'm hunting shorts. This takes 10 seconds. Step 2. Scan for setups. Is 4-hour RSI in a pullback zone? That's a trend trade setting up. Is there divergence forming at extremes? That's a reversal trade brewing. I mark the best 3 setups on my watch list. Step 3. Wait for confirmation. Before I take any trade, all systems must align. Is the 1-hour RSI confirming? Is price at a key level? Do I have a signal candle? If anything is missing, I don't trade. Entry always happens at candle close, never mid-candle. Stop loss goes at the recent swing point. Target is always minimum 2-to-1 reward to risk. These rules are non-negotiable. Let me show you a perfect RSI setup. Looking at daily chart, RSI is at around 55, above 50. I'm only looking for long trades today. That's my bias locked in. Checking the 4-hour chart, RSI just pulled back slightly below 50 and is turning up. We're in the pullback zone with momentum shifting bullish. That's my setup. Moving to the 1-hour, RSI just crossed above 50 with a strong green candle. That's my entry confirmation signal. Looking at price structure, we're sitting right at support level. Perfect confluence. So I'm entering long at the close of this candle. Stop goes below support. This is the exact RSI trading strategy that finds A+ setups every single day. No guessing, no hoping, just systematic execution. And this is exactly the kind of setup we break down inside our academy. See you inside.